All right, we are live. Welcome back, ladies and gentlemen. Welcome back to another episode of Markets with Morning Joe. Although it's not the morning and never is, apparently, when I make these videos, it's always in the afternoon or the evening, and I'm sorry. One of these days, I'm going to be true to the name, Markets with Morning Joe. In fact, I'm going to try to start that morning routine again tomorrow. I'm sorry, my life has been so busy these last few weeks. uh, that the mornings are very difficult for me. But you know what they say: better late than never. So at least one video a week is better than nothing, I suppose. So anyhow, it is March 30th. It's Sunday. It's about 4 o'clock. A few minutes left on the clock for the even hour, but it's 4 p.m. Eastern time, and I wanted to go over the week that we just had. Okay, what a week it was, and what a month it's been. It's been a wild ride, that's for sure. So let's start with the SPX. All right, this is the S&P 500. So the last video I made last Sunday was talking about last week. I'm sorry, not last week. The week before was all options X week, which was meaning, options traders' huge triple witching expiration date was on Friday. And there was a lot of manipulation in the market, a lot of whipsaw, and a lot of options were wiped out, basically expired worthless. Okay, so going back to Friday, March 21st, right here. Let me change my. Let me go to the arrow. So this green bar right here, Friday, March 21st, the markets closed up. Basically, they closed in the green. So they opened at what was it, 56.30, and it closed at 56.67. Okay, so this particular week, that week of options expiration, was pretty much for the most part an up week, right? So it started off on the previous Friday, the 14th, was a big day up, all right, leading into the week of Monday Monday the 17th. And you see these 5 bars here. Monday was a big day up. It tagged this trend line, peaked through, came back, had a down day on Tuesday. Then Wednesday and Thursday also had days where they peaked through the trend line, these candle wicks, and then they came back and sold off. And Thursday looked like, you know, it kind of left you thinking that maybe that it wasn't gonna go through. But you could tell there was a measured move here, all right, that the measured move would go higher, right? So if you measure from this 55.10, for example, up to this high 57.05, so it's almost 200 points. And then if you measure from this red low right here, 56 plus 200 would take you to 5800, which we didn't quite get there. We almost got there, and I'll get to that. Close enough, right? So what happened? So this week was options expiration. Friday, the market gapped up. Closed high, and which meant technically the options truly don't expire, most of them, until the following day, which is a Saturday. I think that's when it all occurs, which caused a gap up Monday. So all the shorts expired worthless, and that caused the markets to go up higher the following Monday. So you see this huge gap up on Monday, the 24th. All right, so that whole week previous, I have this long-term trend line basically coming back from, this pivot low right here. That date was November 6th. All right, so November 6th, tagging these lows here, tagging this low here, and it right through all of this. Okay. So when the market sold off, it broke below this trend line right here, all right, and then broke even below my blue channel, and it worked its way back up, and it kept tagging this trend line that I have, and it took options expiration, and then it gapped up Monday, all right. So it took a lot of power to gap up above this trend line into the 200-day moving average as well as the 20-day moving average. So this is kind of like a bow tie cross right here. There's a lot of resistance here, right? but it looked like it was going to be strong because it went up on Monday and then it confirmed on Tuesday, right? You see this little tiny little cross looking thing? That is I guess you would consider that like a doji, maybe. I mean, it's very narrow as a doji. I don't know if that would be considered a doji, but it was a very narrow bar, and it looked like the market was going to start to trend higher. Why? Because it had a huge move up on Monday, and it closed above the 200-day moving average, and then the next day that body closed above the the the, the wick right here, the tip of that wick right there. In fact, if I zoom in, let's see, does it actually? I'd have to change back to my cross. Let's see here. Yeah, right on it, basically. Yeah, well, no, actually, it closed above it. All right. So it closed above it. And then what the hell happened? So just when everybody thought that the market was, it looked like the market was going to go higher. All right. All these shorts got wiped out this week, basically. Anybody that was short this whole move down, all right, or anybody that took shorts in this area these days right here, they basically got wiped out here. And I'll admit, I was one of them. Although I didn't get wiped out, I didn't close my positions until Monday or maybe Tuesday, all right, possibly on Monday, because when we had this huge move up, my shorts were basically, starting to lose money. Okay, so I wanted to close my position, thinking that this was going to go higher, possibly up to, the next resistance level, which would have been somewhere around, 5,800, 5850. I'm sorry, 5850, maybe 5900. All right, it looked like the market was kind of gearing up to go that way, but the worst thing happened the following day on Wednesday. It sold off. It reversed. The market reversed. Okay, no big deal. It does that sometimes. I mean, it came back almost to the trend line. It closed right below the 20-day moving average. The following day after that, which was Thursday, it sold off even further. It actually had an up move, and then it came back down and it sold off. And then, same thing. You would think because it closed above this trend line that the market was just gonna, was basically preparing its move to go higher. Like I was expecting it to kind of come down here and then bounce off and make another move up, but that didn't happen. On Friday, it was like a bloodbath. Basically, the market just opened up, slowly started selling off, and then it turned into an absolute bloodbath. It just completely sold off. The whole day was selling, which was good. I mean, that's ultimately I was short the market, but I got I had to close a few of my positions, and I did not get back into them unfortunately because I truly didn't. I wasn't expecting such a huge move down, and to be honest with you, I don't think anybody was really. Like a lot of the experts that I follow were also caught off guard, and they're primarily some of them are bulls, they're bullish, they're not bearish. Some of them were bearish, but even the bears were caught off guard. They weren't expecting such a heavy selling day. Now, speaking of heavy in terms of volume, I want to add a couple of things to this. So you see this green bar right here. That is huge volume. That means there was a lot of selling, a lot of volume that day, buying, selling. That was over 6 billion in volume on the SPX. All right, and then you come down to the next day. So this day here, had a lot less. You look at the volume here, that was 2.9 billion. So on Friday, options expiration, you had 6 billion. That was 3 times more volume than the following Monday when it gapped up. Okay, so that gap up didn't gap up on heavy volume. It was half the amount of volume from Friday. And then you look at this body right here, this narrow body right here, that following Tuesday, that had even less volume. Okay, that was 2.6 billion. So this was 2.9, that was 2.6. So you look at this volume, And then the following day was 2.7, and then this day was 2.75, right? And then this day was also kind of low volume, 2.79. The selling was on very low volume, so it was very manipulative. Okay, like like when you have a huge gap up like this and it's such low volume, and then you have this next day that's low volume, you wonder what's moving the markets. And, it's the algorithms. Like there's not a lot of volume because a lot of people didn't know what was going on with the market, the bulls or the bears. Really, like you're at a position point where you don't know which direction the market's truly going to go because there's so much uncertainty in the market with Trump. One day it's up, one day it's down. Nobody knows what the heck is going to happen day by day or week by week. This huge move down along with this sideways consolidation, that is considered a bear flag. That's what I've been saying for the last several weeks. And it finally broke down, which confirmed this move. So if I do a line right here, right, if I start the line from here, right, so from this pivot low to this pivot low to that pivot low, the day on Friday closed, it fell through this trend line and it broke through this trend line and it came all the way down, erasing all of the all this work here, this like past almost 2 weeks, all right, of trading, it completely wiped it out, all right. We almost came down to the 5,500 level. So this day here closed at 55.21. So we're not far. Friday closed at 55.80. We're not far from the March 13 lows. So I'm expecting on Monday, this coming Monday, meaning tomorrow, the market to most likely sell off, come back and tag that level right around that 5,500. At least tag it. It might go further. It might this selling might continue, and we might get a continuous sell off, basically, from this past Friday on, because you've got the Trump tariffs, the reciprocal tariffs, going into effect April 2nd, which is Wednesday. And so far, the market looks like it's scared, and it's the reaction is continuous selling. Now, there's a lot of bulls that still think there's a chance of a reversal, a counter trend reversal, and for the markets to turn around. So that's what makes me think it might be, it might come down double bottom around the $5,500 zone, and then turn around, all right, make another move up. But at this point, there's a lot of resistance here now, okay, because this went up, it broke the trend line, hit the 200-day moving average, failed, came back down. That becomes a weak spot, all right? So most likely the bigger move is going to continue to be down. If there is a chance that after April 2nd, after Wednesday, if the tariffs don't end up being as bad as the markets think it's going to be, then there's a chance that the market will turn around and make another move higher. Maybe it will break through this level and go up to the next resistance point, which would be approximately 5,900. And if it gets through that, then we're talking somewhere around 6,000. I don't think we're getting any higher than that. I still don't think that we're going to make new all-time highs. Some people out there expect it. They're expecting they don't think that this was the all-time high for this year. They're expecting another blow-off top. Right now, to me, this looks like a blow-off top. But what do I know? There's experts in this business. They've been doing it for 20, 30 years. That know a hell of a lot more than I do. So, that's my take on the market. That's so far basically everything that I have been talking about until now really has been pretty accurate. I mean, up until this point here, I felt very confident that the market was gonna continue to go lower. I got fooled just like a lot of other people. Truly, once this trend line was broken and it went up, gapped up with, that was a big gap. and then the next day it confirmed, that was kind of a reassuring signal that okay, maybe this thing is really going to go, continue a little bit higher, at least, at least until the next resistance level. But we didn't get that. And it's the same thing basically the Qs, the Nasdaq, and the Dow Jones. So you can see here the Nasdaq had the same similar pattern. Okay, consolidated bear flag, and we had the two red days up here. Then the Friday broke below this trend line. You look at the Dow Jones, it's the same thing. All right, same pattern. And talking about, I followed the QQQ, which is basically the Nasdaq. Okay, I had the blue channel on the Qs, similar to my S&P chart that I was just showing you guys. So this came down, very close to the March 13th lows. So we'll see. It definitely, this here. See, this here didn't even go through the 200-day moving average. On the S&P, it did go above the 200-day moving average, but then it reversed. But the Qs did not, right? It stayed below the 200-day moving average, which should have been a sign, to me at least. But again, so what I was looking for, I remember having a conversation with a friend of mine. When this day happened on Monday the 24th, it gapped up and it broke into my parallel channel that I have here, closed above it, and I said, okay, I need to see another day above this high. I need a confirmation day to close above it. And I was waiting for one more green day. Like one isn't quite enough because it's, maybe I didn't notice that the 200-day moving average was there. I just, I don't remember it now, but I remember saying I want to see, another break higher, and that would give me the signal that we are going to go higher. And it reversed the following day. But again, I truly thought that maybe that was just a sell off, taking some profits, and then go higher up. But it didn't. It continued down to the downside. So, all right, that's it for this video, folks. That's 17 minutes, and I'm running out of time. So, I know I only focused on the S&P and the Nasdaq, but that's pretty much the majority of the market. The rest of the market is pretty much doing the same thing. So, I'm going to make a different video now, talking about a few other charts, and I'm going to also make a different video talking about the psychology of trading, and when you make mistakes, learn from your mistakes. So if you enjoyed this video, look out for the next two, because they're going to be really important. All right, guys, thank you so much. And please don't forget to hit that like button. And if you haven't subscribed already, please subscribe. And any comments, if you want to comment on the YouTube channel, I would love to see some comments as well. And sharing. I know I'm asking for a lot, but every little bit helps. Thank you so much, guys. Have a great day.